All right, so this is a tough video for me because I swore I wouldn't be doing all the banking hype and all the banking failures and all that stuff. But you know what? There's another bank that's looking like it's going to fail today, the First Republic Bank, and I just feel compelled that I need to do a video on it. I'm seeing all these people do videos and people are hyping it, and I want to kind of break it down and kind of eliminate the noise. And that's what we're going to do in this video. So if you haven't already subscribed, hit the bell that way you're notified every time I launch a new video. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we are talking about bank failures, what's going on in the country with the banks. Obviously, with a lot of what we do with infinite banking around here, we've been talking about the fact that infinite banking and whole life insurance is sound banking. It's the fractional reserve banking system is creating a lot of problems. A lot of these banks are over leveraged, and the environment, the economic environment that we're living in, is kind of a perfect storm for bank failure. And then, of course, then it becomes a whirlpool of negative sentiment, and that creates more problems. And because as soon as banks actually start to fail and people lose trust in the banking system, then they go, what do I do? That's when gold prices go crazy, and like, hey, there's nothing wrong. I think gold is amazing. But here's the deal. This new bank, we've had a couple banks that have actually technically failed this year. Everybody knows them, SVB and Signature Bank. But we have this First Republic Bank that today is looking like they're in a lot of trouble. And it probably is a couple days ago by the time this video comes out. But today it's looking like it's in a fair amount of trouble. And I personally believe they're probably going to be the third bank this year that's going to fail. They haven't failed yet. Maybe by the time this video is out, they actually technically did fail. We will see. But here's the bottom line. It's these smaller regional banks that run into problems. And so this is what's happening. This is what's happening to the banks in this situation. And this is going to become, I believe, more and more of a problem with these banks, because as banks like First Republic Bank fail and they struggle because of the economic environment, and when the SVBs of the world failed, now people are losing trust in those types of banks. So there's a flight to safety, and safety in this world means going with a large bank like a Chase or like a Bank of America or a Wells Fargo or something of that nature, because those are the banks that are too big to fail. Now, what happens is people flood away from the SVBs and the Signature banks and the First Republic banks, and they go to those banks. And so, and it's not necessarily people removing their money from those banks, even though that happens. It's a reduction in new deposits into those banks, right? People are reducing the deposits that they have. And what happened in this situation is, if we look around, it's not rocket science. We've had interest rates that have been going up, which puts stress. The cost of money for the banks is going up. And so then what happens is, if they don't get new deposits on their balance sheet, they can't withstand the overhead that goes along with the bank. And so when you look at it like this, and you look at the fractional reserve banking system, and if you understand the fractional reserve banking system and you realize that with the banks only need, they don't really need to have reserves anymore because of all the regulatory changes during COVID. The banks don't even need reserves like they used to need on their balance sheets for their lending and for everything that they have going on. So you put your money in a bank, they just lend it out. They don't need to keep any reserves. And so then when their cost of money goes up and banking deposits go down and they have to meet client needs, they're in trouble, and there's no money there for them. And so when you look at it like this, it's really showing and exposing the banking system as being this massive Ponzi scheme, right? Because what does that mean? This just shows, because of the fact their main problem is the fact that they didn't get their quarter one deposits reduced by $100 billion. So this just goes to show that because there was simply a reduction in new deposits, their bank is at risk of failing. That is classic Ponzi scheme. That is that is the definition of Ponzi scheme. So the banking system is effectively a Ponzi scheme when you break it down like that. It's pretty crazy when you break down that analysis and you realize that And it's no wonder people are getting uneasy about this. So when I say infinite banking is sound banking, banking utilizing a whole life insurance policy, effectively utilizing a properly designed whole life policy, is because whole life insurance companies have to implement sound banking. There is no fractional reserve banking. They have to leverage every dollar. Every dollar in that policy has to be assigned to you. They can't go out and take other risks outside of it. They have to make sure they have the reserve capital requirements at a level that no banks do. That's why back even in the Great Depression, in the Great Recession in '08, in 1929, that's why when all these banks failed, like heck, in 2008 and 9, over 560 banks failed. Not one whole life insurance company failed. And what I just explained is the reason for that. So this is what's going on, right? Like, I'm gonna look down here for a second. And so, like I said, first quarter deposits dropped by $100 billion. This is happening because of the fact that, you know, new customers are not bringing money in because there's not as much confidence in regional banks. The bigger customers that have account values above the FDIC insured level of $250,000 per account, they are leaving and they're going to other banks where they feel safer. And so those accounts, I mean, that puts a lot of stress on the banks. And I think because of this is causing a systemic issue, right? And like what happened with the First Republic Bank here is it's happening right now. And it's kind of, this is proof in the pudding. And I think we're going to see a lot more of this. Major banks actually stepped up to try to bail them out. So think about this. The banks that people are flying to are actually trying to step up to the plate and bail out the smaller regional banks, because these big banks understand if we have a run on these banks, if we have a banking crisis, that is going to have a massive ripple effect that's actually going to come back and hurt the big banks, probably cause more regulation, more expenses, changes to the way the banking system has to be run. And of course, the people that run that, banking is like the most profitable business in the world if you do it right, because like, let's face it, you put your money there, they make all the money. If the bank fails, they made all their money. It's you that lose, right? Above and beyond the FDIC, or below the, or yeah, above and beyond the FDIC, right? So these guys like JP Morgan, Citigroup, Bank of America, and Wells Fargo all contributed $5 billion each. Uninsured deposits. They took $5 billion each, uninsured deposits, into First Republic to try to prop them up. Morgan Stanley, Goldman Sachs, they kicked in $2.5 billion each, and 5 other banks contributed $1 billion each. That's $30 billion that these private banks contributed to First Republic Bank to try to prop them up. The bottom line is this rescue attempt, it failed. There was a $30 billion injection. The very next day after the $30 billion injection, First Republic Bank suspended their dividend. Since then, their stock price has slumped to the lowest that it's ever been. Deposits are slowing down. And now because this happens, people get wind of it. Now people are scared and they're pulling their money out. And at the end of the day, I think it's probably too little too late. By the time it hits that place, people are really in trouble. So what are they going to do? You know, they say they're going to tighten their belt. They say they're going to deal with more competition for the lines of business that's going to cause stress. They're going to figure out how to navigate that. Then they're going to restructure their balance sheet, and they're going to reduce expenses, maybe close some locations, get more efficient, all that stuff. But honestly, we're talking $30 billion was injected, and that still wasn't enough. If that's not enough, this bank doesn't have enough to sustain itself. It's going to have problems. Once again, by the time this is out, maybe it already failed technically. I'm going to try to turn this video around as quickly as possible, but it's a pretty disgusting situation. You know, there's been articles that have come out. I'm obviously one of about 1 billion YouTubers right now that is talking about the fact that there's been 180 or 200 banks are at risk of failure. USA Today, New York Times, Wall Street Journal, they've all done articles on this stuff. The bottom line is this is why, because what's happening is the whole fractional reserve banking system is a Ponzi scheme. And as the people slow down their deposits and as interest rates go up and the cost of money goes up, that those two combination things, the cost of money goes up, that puts stress on the bank. And if they don't have the new deposits to pay for that, well, then they fail. And that's where we are. It's a perfect storm right now. And I think as inflation continues to go back up, I think inflation has come down. And I think we're gonna have like a double dip inflation. It's gonna keep going back up. I think we're going to retest some highs potentially, or at least go up from where we are now. And as that happens, we're going to have cost of money is going to go up even more again, right? Because it's kind of been, all over the map. And now that when it goes back up again, that's going to put more stress on, because companies right now are not as healthy as they were 8 months ago when 9 months ago when inflation became an issue to begin with. And it's just going to get worse and worse and worse. And I think by the end of the year, this is the reason we're going to start to see banks run into these problems. And so anyway, curious to hear your feedback. If you have any questions, comment in the comment section below. If you want to learn how to get yourself out of this, it's one of the reasons that I do infinite banking. It's one of the reasons that I coach people to this. Whole life insurance have been navigating and dealing with this when we have banks failing every single year. Utilizing a whole life insurance policy as a savings account, as a banking alternative, is one of the most powerful things that you can do. I know that sounds counterintuitive to a lot of people, but if you want to learn how to do that, I would encourage you to go to my YouTube channel, subscribe, hit the bell, that way you're notified every time I launch a new video, because I got a lot of videos on this, personal economic stuff, personal finance, banking, infinite banking, how to save money, how to create wealth, real estate investing. We do all this stuff. And the bottom line is, saving your money inside of a whole life policy is the most effective way to go. Now, it's not an investment. You can't lose money. It's not a risk. There's all the guarantees there. You got to design it and structure it properly. I've got a whole playlist. I'll put it on the end here so you can check it out if you want to go there. But hopefully you found value in this. If you did, make sure you subscribe and hit the bell. And feel free to reach out if you have any questions. You can always email me, chris@life180.com, and I'm happy to help anybody that you want. Till next video, have a blessed and inspirational day. We'll talk soon. See ya.